Hey, what's up, stock compounders? Brad here. So it is that time of the week again for our Q&A session. So let's jump right in. You've got questions, we've got answers. I don't know who we is. I'm not sure why I said that. It's just me taking a crack at these answers today, but let's go for it. See what I can do here. Can you do an inverse video with all the reasons you wouldn't want to invest in Alibaba? That is a great idea, Rick. Appreciate that suggestion. Yes, I will do that. You guys can count on that. I love the idea of inverting the story. Super important when it comes to investing. Dwayne, how has your portfolio performed over the last year or so? Well, I've made videos recently about my magic formula portfolio. That's just kind of a smaller test portfolio. And I mean, my big positions are really just Micron and Seritage growth properties over the last year. So basically, you look to see how those have done. That's how I've done. And those have done pretty well over the last year. So no complaints there. And I probably should try. Well, should I? I don't know. I'm kind of mixed on how, accurately, how often I should track my portfolio performance. I think there's something to be said for buying things that I like as long-term compounders and not really looking at them very often. Looking at them as a business owner where I don't care so much what the price swings are doing recently. David, what are some of your favorite books that are not about investing? Oh, that's a great question. Am I going to be able to come up with any right off the bat here? That's a great question, though. I'm going to make a video about that. I'm going to put that on my video list. My favorite books for investors that aren't about investing. I really like that topic. Thanks for the question, David. If anything pops up while I'm doing the Q&A here, I will share what those are. Smell the roses. What is your average CAGR for the last 10 years, including all investments? How much has your net wealth grown in the last 3 years? So I haven't actually been investing for 10 years. I started investing, I think it was 2015 or 2016. So it's really only been about 5 years. So I can't give a 10-year CAGR. Net wealth grown in the last 3 years. I've probably done about a double in the last 3 years. Okay. Which is great. That's on track for me, considering, I'd really like to double every 2 or 3 years, which is the same ambition that Monish Pabrai has. So yeah, I'd say about a double in the last 3 years is where I'm at now. Please, can you comment on monthly investing versus saving up a lump sum and then investing infrequently in undervalued businesses? Absolutely. They're two very different strategies. So how I'm reading this is monthly investing in kind of an index fund, more of a passive approach, versus saving up and then deploying lump sums once those great opportunities come along. You really just have to understand how you're wired temperamentally. That's a big piece. And how much time you have to commit to doing the research to pick individual businesses. If you don't have much time, if you know that psychologically it's going to be really hard to stomach a 30% or 50% drop in your portfolio, which is probably more likely to happen if you're buying individual businesses. Say if you have just a handful of individual stocks that you own, there could be a lot more volatility there. So you've really got to know yourself. And the only way to know yourself is to do it, to invest, and find out who you are in that world of investing. So, a lot of great investors recommend for most people that it should just be kind of a monthly automatic into an index fund kind of approach. And you don't really look at it, okay? Because you don't want to allow that kind of psychological influence to come in, seeing these fluctuations in the value on paper of your portfolio, because it's really a long-term game. So yeah, it's really just about your temperament. It's about being honest with yourself. What is likely to work better for you over the long term? A monthly kind of passive index approach, or letting the cash accumulate to go big on individual opportunities. So that's what I'd say about that. How often do you look at your stock portfolio? Honestly, it's not all that often. Maybe every couple months, I open my TD Ameritrade account and actually look to see. And usually when I do that, I do it because there's an opportunity that I've come across that, I'm wanting to add to the portfolio. So maybe quarterly is how often I look. And that might even be too much, quite honestly. I watched some of your magic formula and loved your modification. Cool. I think it can be extremely interesting to see how these modifications worked when back testing. What do you think? I agree. The modifications I'm using, does a guru own it? Is there a VIC write-up in the last 2 or 3 years? Insider ownership? I don't know how to back test those. Okay, I don't have access to the tools. I don't have the know-how to be able to accurately back test an approach like what I'm doing. Unfortunately, I would love to be able to do that, but because I don't know how to do that, that's why I've set up this test portfolio to find out. Unfortunately, it's going to take some time before I get enough data on it to be able to understand how well it's working, or even if it's working. But that's where I'm at. If any one of you has the expertise to be able to do these somewhat complex back tests, let me know. I'd love to collaborate on that. I think that would be a very interesting project. What is your ultimate investing goal? I love that question. Is there a point at which you decide you've compounded enough and just move to passive ETF investing? What is my ultimate goal? I'm a little embarrassed to say I don't have a super clear ultimate goal. I mean, the phrase, financial freedom comes to mind. But I've never gone and set a particular number for what that means. What is my financial freedom number? And honestly, the goal, it's not the most important thing right now, because I don't really have a clearly defined goal. I'm really just enjoying the process. I'm enjoying learning about investing. I'm enjoying, teaching here on the channel, getting feedback from each and every one of you, learning from you guys. I mean, it's fun. It's really exciting for me to be doing this. But it's a good point. I ought to more clearly define, or not more clearly define, actually define what my ultimate investment goal is. And it's very possible that there's a point when I'm like, okay, I'm not going to do this active stuff anymore. I'm just going to, kind of set it and forget it in a sense. But I'm not there yet. So, and it's great. It's fine because like I said, I'm enjoying the process. But I'm going to revisit that. Thank you for that question. What is your highest conviction stock at the moment? I would say Shinniken in Japan. okay? For any of you who aren't comfortable or don't have access to Japan, my other highest conviction stock would be Alibaba, okay? So those are kind of two at the top of my highest conviction list at the moment. And I've made videos about both of those in the past. Any idea of how we can find out all the businesses in Chris Meyer's portfolio? He did reveal a couple in his latest blog post and would be keen to know the balance companies. I can't find his on Ticker, right? So Chris Meyer, author of 100 Baggers, basically how to find stocks that return 100 to 1. You invest $1,000, you're left with $100,000 at the end. I think you could probably piece them all together by reading through the last year or so of Chris Meyer's blog posts. Often, I would say, maybe every month, he drops kind of a name that he owns and talks about it as it relates to whatever lesson he's trying to flesh out in that particular blog post. So he revealed 6 of them in the last blog post that he did. He says there's 11 companies that he owns in the portfolio. And I don't think we have any way of knowing, like through filings through the SEC or anything like that. And I think the reason is he doesn't manage $100 million or more dollars, or also possibly just because of how the fund is structured. He may not have to disclose even if he manages more than $100 million. So I'm not sure. But like I said, if you want to go through previous posts, that may be a good way to cobble it together. I'm pretty excited that he revealed 6 in the last post. And I am going to do a video kind of breaking down those 6 using some of the high-level metrics that I like to use to start the filtering process. So keep an eye out for that one. What are your thoughts on Pinduoduo? It is one of Li Lu's holdings. Absolutely. It's a recent buy for Li Lu. I think just in the 4th quarter of 2020. On Dataroma, the reported price was $177.67, and now it's $133. So reported price, that just means at the end of the year, last year, December 31st, 2020, the market closed with Pinduoduo at $177.67. So it's come down quite a bit. Definitely seems intriguing, as Li Lu is a concentrated investor who tries to find long-term compounders with a significant margin of safety, and now we can buy it at a price 26% lower than Li Lu. So again, the reported price is not the price that Li Lu bought, okay? It is simply the price at close on the last day of the quarter that the 13F filing is referring to. So what I would do is look at, in the 4th quarter, what was the price range of Pinduoduo? And you can see what the low was between October 1st and December 31st. And I like to just assume that that's what these super investors bought at. That gives me a conservative estimate of their buy price. So Pinduoduo is on my radar. I'll probably do a deep dive in the near future. Yeah, but thanks for the nudge on that one. But very important, there's a lot of people who think the reported price on Dataroma is what the investors bought at. Not the case. Not the case. Thank you for your great work. Absolutely, John. Thank you. My question is, how do you decide to sell your stock and move on to the next one? I recently bought Baba and saw your ATCO recommendation and want to make a switch. Okay, so I like what Monish Pabrai says about this in a recent talk he gave. I don't remember. He's done a lot recently, maybe like 4 or 5 talks just in the last handful of months. But in one talk, I think he picked this up from Nomad, Nick Sleep, okay? Basically, if the business is getting better, forget about valuation, okay? And just hold. Treat it like you're a business owner. even like you own the whole business, okay? If it's getting better, let the business compound your money for you. Now, if there are issues with the business, that's when you really got to look and decide, all right, what is my opportunity cost here? Should I just, move my capital over to Atco? Does it make sense to do that? Another thing Pabrai says is the mistress is always going to be hotter than the wife. Okay, so Alibaba, well, you say recently. I'm not sure how recently you bought Alibaba, but assuming you've owned it for some time, right? There's a good chance you know more about Alibaba than you know about Atco. So, you may look at Atco and on the surface, maybe it's hot, right? It's an attractive investment, but you don't know that much about it. It looks hot on the surface. That's the same thing as the mistress, right? You don't really know, the issues, the challenges, the warts that are underneath the mistress, right? So that's one thing to consider as well. But I think the simple thing is, if the business is getting better, hold on to it. That strikes me as wise advice. But yeah, let me know what you like about Atco. Something I've taken a peek at, but I'm intrigued to hear more about that one. Any thoughts on the VIC write-ups on BBCP or Thunderbird Entertainment? Not sure. I haven't looked at those. But hit me up in the comments with a quick pitch of those companies, and maybe I'll take a peek. I do have a fair number of companies on my list to get to, so it would need to be compelling for me to take a look. But yeah, I'm sorry I don't have more on that. Since you tweak the magic formula and you add criteria for that stock screener, what changes would you make for acquirers multiple stock screener? Hello from Russia. Awesome. Thanks for being here from Russia. What would I make for the acquirers multiple stock screener? So acquirers multiple is a little bit different in that with the acquirers multiple, all you're looking at is cheap businesses. Okay, that's the only metric. When it comes to the magic formula, we're looking at the combination of cheap and good. Okay, a great price paired with a quality business. So for that reason, I think there are probably going to be more long-term compounders, at least the potential for more long-term compounders with the magic formula. That's why one of my tweaks is to hold for longer than a year with the magic formula. I probably wouldn't do that with the acquirers multiple. So for that reason, I'd probably just go straight up with the acquirers multiple. I wouldn't add additional filters necessarily. Because it would just be that 1 year hold. And I'm hoping the price, the delta between the price and the value of the business converges in that 1 year. And then I'm off to the next cheap stock that I'm hoping gets priced in alignment with what it's worth. So they're different strategies, in my opinion, and I wouldn't be inclined to tweak the acquirer's multiple. It's a great question, though. What has happened with Racist? Yes, very good question. In the last day, minus 47%. Is something wrong with the company? Thanks in advance. So let's try to pop into ticker here. Hopefully I'm already signed in. I've got to move this real quick because they placed it right where my feed goes. Let's look up Racist real quick. So I really like Ticker Terminal. If you guys don't have access, ping me and I will get you in for free to the beta. But yeah, you look at this. This is the last year. You can see it was up, what is this, around $11. Well, it's 11 Turkish lira, I believe. Coming down over the last 3 or 4 months. And then boom, it was at 6 and then it went to 330. Okay. So big drop. And I don't know exactly. I haven't had a chance to look at this yet. And unfortunately, when you click the news tab in Ticker, there's nothing recent, right? Nothing super recent. I mean, this latest one is from February 16th of this year. So that's like 2 months ago. But my understanding, I've just got to refresh this feed here. My understanding of what's happened, and I've heard from a few of you that this might be the case, is that Races issued more stock. Okay, they did a raise. They did a capital raise, diluted current shareholders. And it's possible either a lot of shareholders aren't happy with what they plan on doing with that capital, or just a couple of the larger investors in the company aren't happy with that move by Races to issue more stock. But I don't know. I haven't really dug into it yet. It's on my short list of videos to make. I'm probably going to do that this week. But holy cow, it is a big move. And Pabrai, I think Pabrai, let's just look it up without speculating here. So Pabrai has a quite large position in Races. You can see it here, about $36 million in Races. And the thing has gone down. It went down, I think, more than half since this was updated. So that's like an $18 to $20 million loss on paper for Pabrai. And I wish I could be a fly in the wall of his office. I wish I could see, all right, is he buying a whole lot more because the price has cratered? Or is he getting nervous? Is he thinking about exiting? It'd be awesome to be a fly on that wall. I simply don't know. But it's very interesting to see a move that large in one day. So I will take a peek at that and try to get to the bottom of it. If any of you have already done that, I know a lot of you follow Pabrai very closely and what he holds. Let us know in the comments what you've found on that one. Is past performance the number one indicator of a good super investor, or are other things more important, such as philosophy and process? Performance, that's really the gold standard, I would say. But you want to make sure there's enough performance, enough performance history that you're including, ideally, a couple crashes, a couple recessions. So looking back, it'd be nice to get at least the global financial crisis in there and the dot-com bubble, okay? Because we want to make sure if we're going to be cloning super investors, that their process, they're not generating high returns simply because they're taking more risk and they've benefited from taking more risk in this environment where prices are just going up and up and up, okay? We want to make sure they're not swimming naked when the tide goes out, when one of these crashes happens. So I would say past performance through a couple of bad times would be the number one indicator. And of course, the more you understand about their philosophy and their process, the more comfortable you're going to be cloning them. Okay, so it's important. It's really why, one of the big reasons I really like Mohnish Pabrai, because he's so transparent with his process. He gives all of these talks at universities around the world each year, and you can really get inside the head of somebody like Mohnish Pabrai. So I think that's pretty important as well. With the recent IPO of Coursera, I didn't even know Coursera IPO'd, thank you. What is your opinion of education-oriented companies? Their mission is good, but can they monetize it? It's not an area I've really gotten into. Certainly, from an investing perspective, it could be compelling, right? It could be a very strong growth sector over the years, kind of kick-started with the whole pandemic thing. And then, I could see online education really starting to dominate over the years versus, going to a brick and mortar university. But yeah, I don't have too much of an opinion on it. I haven't dug into that. Interesting question though. Thank you for all the great value you send out. Absolutely. Thank you for receiving it. In Lilu's recent talk, he spoke about the importance of learning about good businesses. Can you recommend any books or other sources that discuss great businesses, and also ones that discuss poor businesses? Yeah, the first things that come to mind with that, sources that discuss great businesses. I mean, you can pick up books that talk about like the CEO of Nike. I forget the name of the book. It's pretty easy to find. It really just talks about how this guy built Nike, right? You can find the same one around Steve Jobs. There's a lot of great CEOs from great businesses where there's been quite a bit written about them. So that would be a great place to approach that. There's a book that just came out, the Something History of Berkshire Hathaway. Literally just came out. It is a huge book, 700, 800 pages. But I think it really gets into the weeds on some of Warren Buffett and Charlie Munger's best investments through Berkshire Hathaway. So that would be a fantastic book to learn about great businesses as well. Ones that discuss poor businesses. That's interesting. I like that question as well. How would you learn about poor businesses? Yeah, I don't really know about that one, but that's interesting. If any of you guys have thoughts, let us know in the comments about the poor businesses. How can I find detailed breakdowns of a company's liabilities and a company's assets? The balance sheet uses pretty broad terms, and I was wondering if I can find something more specific. Read the annual reports going, years back and look in the footnotes. I mean, there's just any great business, any great management team is going to have everything in that annual report that they would want if they were on the other side, right? If they were investors in that business. So devour the annual report, read the footnotes. There's everything you need to know is in there if it's a company worth pursuing. And ticker terminal is pretty good. There's a lot of things in ticker terminal in the the balance sheet, the income statement that you're not going to find through Morningstar and some of these other more popular services. So check out ticker terminal as well. One of my stock picks is 80% down, but it is still a good undervalued business. In general, I'm in deeply positive return territory. What would you do? Cut it and move on, or keep their position? So Pabrai, he's had a number of investments where the company went down 80%, okay? And, he still had conviction in the business because he understood it. He thought even when it was 5 times higher, he thought he was getting a good value, right? Value compared to price in the business. So, anybody who's human, right? It makes you a little nervous when something drops 80%. You start to think, well, did I miss something? How could I think I got a good deal and now it's down another 80%? But, there's companies that are just that volatile, okay? Industries, very small companies. There's just some areas of the market that are quite volatile. So I'd really have to know about the business in order to know what's going on. But if I had just as much conviction when it was down 80% as I did, buying it originally, I'd be inclined to add more, presuming I didn't take a full position right off the bat. But I wouldn't cut it just because the price dropped, okay? But it would give me a gut check. I would say, okay, do I really understand this business? Is there more work to do? And I would go and do that more work and try to, figure out everything I could about why it may not be a great business, okay? Flip the story, invert the story. Why is this a crappy business? And do everything you can to figure that out. One of the tips I got from Karan was What is the site? What is the site he uses? There's a site where you can track what other investors are, what they own, and you can look up certain stocks and see who's selling it short. Okay, and you can actually message them and ask them, why are you bearish on this company? Okay, so that's a great approach. Find the smartest people who are bearish on the company, who are short on the company, and learn. What are they seeing that you're not seeing? So I couldn't tell you if I would cut it or keep it with the information here. What is your opinion on crypto? Do you think it is a major bubble, or do you have any conviction on it? Love to hear your thoughts. Well, I don't have any conviction on it, that's for sure. I'm a value investor. I don't know how to value crypto, okay? I have no idea if it's even possible to value crypto. If it is, I don't know how to do it. But I also I'm not so quick to deem it a major bubble, okay? I don't know enough about it. I don't understand the technology well enough to be able to say with conviction, this is a bubble, okay? It's stupid to put money here. I can't say that. I do own some crypto. I bought some, I put in what I was willing to lose. Okay, it's not a huge position by any means. I bought like 5 different cryptos. I think back in 2017, after Bitcoin crashed from that 20,000 high. After it crashed, I bought a little bit, but I don't see it as an investment. It's just, it was to encourage me to learn more. Okay, not an investment. But it's going to be really interesting to see how things play out over the next decade, 2 decades in the crypto space. It's something I'm not writing off. I'm open to it. I want to learn more about it. But I think it's probably very early as well to make smart investments in the crypto space. It's like the late 90s with the internet. All of the internet companies, these new internet companies, very hard to pick winners in the early days of something like that. And I think it's the same with crypto. So I'm fine waiting a couple of years, 5 years, 10 years until there's something that's obvious to me that will do very well. That is not the case now. What is your competence on China government regulation of businesses and possibility of Chinese stock delistings in the U.S.? Did these factors affect how much you were willing to bet on Alibaba and your initial position sizing? You guys, I have a whole lot to learn about Chinese government regulation of businesses, but I'm very interested in China. I don't think Alibaba will be my first or will be my last investment in China. So I do think the possibility of a delisting is quite low, but that's more of a gut thing than something I can really rationalize to you guys. China, it's going to be interesting. Again, just like crypto, it's going to be, obviously they're very different, but it's going to be interesting to see what happens with China over the next couple of decades. Amazing work on Baba and sharing all the details. Yep, excited for a deeper dive on Chris Meyer's holding. Absolutely, that's coming. What percent of portfolio would you put a cap on a certain industry, say REITs? For example, if you already have a large holding on SRG, would you place same amount of conviction on a similar holding like APTS? That's a great question. I don't have any kind of hard line on what kind of cap I have around different sectors in my portfolio. I would make another high conviction bet on another REIT, for example. I wouldn't have too much of a problem with that. I just as I sense into this, I probably wouldn't put more than half of my portfolio on a cost basis into one sector. That's just kind of my comfort level. And I wouldn't want the REITs to be all that similar. Probably, I'd want them to be kind of in different areas of real estate. But yeah, that's an interesting question. I haven't thought too much about that. I'm inclined to not have any real hard rules around that. We all like to buy a bargain, whether it's at the supermarket or in the stock market. Amen, Henry. What do you look for as a margin of safety? Are you hard and fast, or does it depend on the company you're interested in? Some companies will rarely be available at a discount, but are still great businesses. So I've had a shift. Monish Pabrai had his shift. I've had a recent shift as well, where I'm much more interested in owning businesses that are going to compound my money for me over decades, rather than moving in and out of the 50-cent dollar bills or the 25-cent dollar bills. So that said, valuation is important because I may be wrong, right? I may think this company is going to be a great long-term compounder, but it turns out to be a dud. If I'm able to buy this company that I think is going to be a long-term compounder at a discount, I can be wrong and still do okay. I really like that. That's a great thing as an investor. So I want to buy things at a discount, but it's not the most important thing to me anymore. The most important thing is to buy a business that's going to do the work of compounding for me. Okay? That's what I want. So margin of safety has become a little less important, but like I said, I'm not always going to be right on the long-term compounders, and that's when the margin of safety is important. I hope that makes some sense. What's the best way to invest in behalf of your kids? What is it called? There's two names. UGMA, UTMA accounts is the thing that I found to be best in terms of tax advantages. That's what I would do. Pabrai, when he invests on behalf of his kids, he uses a UTMA account, and I think he only has like one or two, maybe three positions, probably just one or two in those accounts for his kids, his highest conviction ideas. If I had to guess right now, it would probably be Racist and Shinnikin in his kids' investment accounts. So those are some both structures and portfolio styles to consider for investing on behalf of your kids. How do you stay focused on your investing? I'm going to say one more thing. If you're investing on behalf of your kids and it's going to be a retirement account for them or something like that, like that's the intention, it's also quite reasonable to just invest in an index fund, right? If you're going to have 60 years of compounding, and you're able to put a substantial stake aside for them, they're going to be well off. If you just make 8 to 10% per year in an index fund, if you have that long of a runway. So that's something to consider as well. How do you stay focused on your investing plan when cryptocurrency is rocketing to the moon? Well, honestly, the way I've approached this is I make these little bets on crypto, okay? And it allows me to keep the FOMO at bay because I'm, even just in a small way, participating in the madness. So that may be something you consider. For example, I'm a little embarrassed to even say this. A couple of weeks ago, it might have been a month ago, I don't know, time is weird when you have two kids. I bought $100 worth of Dogecoin, okay? $100 worth of Dogecoin. So virtually insignificant, right? But Doge, it's, that $100 is now $664. Okay. It's not going to change my life. It's not going to change, my investment portfolio at all. But I don't have FOMO, right? That little thing, just putting a couple bucks into something. Of course, it's probably a net negative because now I'm like kind of keeping an eye on Dogecoin, which I don't really want to be doing. But it's just kind of this fun, whatever experiment thing. So that's one approach, is to just put a little bit in, forget about it, come back to it, in a couple of years. For me, that helps. It helps keep the FOMO at bay. How to structure an LLC to invest in the cheapest way for non-U.S. residents. I have no idea. That would be a good question for corner of Berkshire and Fairfax. I'm sure you'd get some great responses if you posted that question in there. How high is your conviction with Alibaba? Well, I made a full 20% bet on Alibaba, so it's pretty high. Pinduoduo is like Alibaba on steroids. Again, I am going to look into Pinduoduo. Cloud is in a very nascent stage with an unclear path as to whether the enterprises will prefer private cloud versus public, especially with trust deficits around privacy in China. Other businesses are yet to break even, with Ant's growth potential being permanently impacted. It would have a long-term impact on Baba's long-term valuation, even though it might look small right now. How high do you think? By the way, Ant, just one piece of the Alibaba pie. How high do you think is the margin of safety currently? P.S. I am long Baba. Wanted to know your thinking on the long thesis. So I'll probably do a video about Alibaba somewhat soon, just to flesh more of this out. How high do I think the margin of safety is? Well, I really like, Charlie Munger said he sees it as a cash alternative. Okay, and to me that is a very high compliment to Alibaba. That's basically like saying, if you were to buy treasury bills, there is no risk of losing money, essentially, right? But you're not going to make much either. Very low return on treasury bills, especially today. So with Alibaba, I think that's kind of what he's seeing. Over the long term, there's very little risk of losing money with Alibaba. Those are the kinds of bets that I really like, those asymmetric, down upside to downside bets. I don't know. I haven't tried to calculate what the margin of safety is, but I do see asymmetry, okay? And when I see asymmetry of the order that I'm seeing in Alibaba, it's a no-brainer bet to me. So that's where I'm at with that one. Was listening to Charlie Munger discuss cloning. I need to listen to this. That sounds very interesting. He advised his grandson that this is a good idea as long as he is looking at people who don't have the same size limitations as Daily Journal or Berkshire Hathaway. At what point do you think a fund starts to feel these size limitations and become suboptimal cloners? Are you watching anyone who runs less than 200 million? So here's how I think about fund size, okay? Say, you're a fund with $1 billion and, ideally you want to have 10% bets. So you're running $1 billion fund, you want to make $100 million bets, but you don't want to own more than 10% of the shares outstanding of a business that you're buying, because if you try to buy more than 10%, you're really going to move the needle on the stock price, right? And there's additional disclosures and all of these things. So you really can't buy a business under 100 or under $1 billion market cap if you're running $1 billion and you want 10% bets. So Pabrai is really looking for companies under 500 million market cap. So that's harder for funds to do if they're managing more than $500 million. So that's a very easy way to think about it. So I would say, when you get to $500 million or more, you really start to feel these size limitations. $500 million, that's kind of and that's around where Pabrai is now. I think he's a little bit higher than that. After what happened with Racis on Friday, he might be just under that. That's mostly a joke. But yeah, I would say right around that $500 million fund size. Are you watching anyone who runs less than 200 million? Absolutely. Bonsai Partners, I don't remember off the top of my head how much they run. Massive Capital, they run a couple $1 million. But again, I want to find more and more of these funds that are under $500 million that have that great track record over, say, 20 years since the dot-com bubble. Yeah, that is a top priority for me. So keep them coming, guys. Let me know which fund managers you guys are cloning under $500 million size assets under management. Why don't you invest in crypto? Well, like I said, I own some crypto. I don't see it as an investment because I don't know how to value it. And if I don't know how to value it, I don't know that what I'm paying is less than what it's worth. And so that's my definition of investing. And so I'm not investing in crypto. Don't you want to get rich? I want to get free. I want to get financially independent. How can Elon Musk buy it and we Chicken Little? Perhaps he's truly from Mars. Elon Musk has a different set of DNA than virtually any other human that I've ever met. And I like what Pabrai actually said about Elon Musk, in that Pabrai would be nervous to invest with Elon Musk because Elon Musk isn't driven by money. Okay? He's driven by changing the world, going to Mars, right? Solving these huge energy problems, climate change that we're faced with. He's got enough money. That's not what drives him anymore. Okay? It's really changing the world. And when you invest with someone who's not driven by money, it becomes a lot more unpredictable how they're going to make decisions, right? And whether they're going to make decisions that are in alignment with your interests as a shareholder. So anyway, guys, that was just an aside. But yeah, crypto. Yeah, I don't need to say any more about that. So thank you all. This was awesome. There were a lot of questions this week. I think this is the most we've ever had. I keep saying we. I don't know why I'm saying we. Me, myself, and I. Is that who I'm talking about? But anyway, guys, keep them coming every week. I'm going to do this every week, and it's just getting more and more fun to field these questions. So thank you all, and I will see you in the next video. Take care.